Vice guest believes that North Korea's new leaders may be willing to embrace economic reform similar to those seen in China. Dr. Mark Mobius oversees more than $40 billion in emerging market assets as the chairman of Franklin Templeton Emerging Markets Group. He now joins us on the line from Buenos Aires, Argentina. Many thanks for joining us. Happy holidays to you, Mark. If I can ask, first of all, start by asking your reaction to this week, the first week of the death of Kim Jong Il, and the concerns about the uncertainty over transition to his son.
Well, I think the transition has been pretty smooth, and I think it was pretty well prepared. It's interesting to note that he was giving orders to the army even before the announcement of his father's death. So he apparently is in control, of course not alone, but backed by his relatives. And I think the transition is going to be rather smooth. And, of course, there's always a chance of some unexpected event taking place. But so far, so good.
His father was, of course, paraded around for 20 years. His son has had only 1 year. And you mentioned his relatives. His uncle is the mentor. I mean, there is uncertainty, isn't there? So you mentioned, you say it's quite smooth, but there is concern about a lack of a power base. Does that worry you as an investor, for example, in the North Korean bonds?
Well, in some ways, it's making me feel more optimistic because in this kind of environment, we can expect some change. And I don't think it necessarily means some military change, but some economic change, some realization that maybe they've got to adopt some of the market economy ideas from China. So in some ways, a break from the past could be a good signal. And so I'm more optimistic than pessimistic, frankly.
Now, you're holding North Korean bonds, also South Korean stocks. I mean, as an investor, how do you play this change?
Well, we're just doing, on our side, we're just doing the equities. And South Korean equities we're still holding on to and buying more if the stocks come down any further.
And trading at a discount to most of their peers, South Korean equities. Do you see that happening for the foreseeable future?
Yes, I think so. I think given the general uncertainty, and you must remember that the Korean stocks are a big part of the index. So given the bear market mentality that we have at this stage of the game, South Korea would be expected to be in that position, in a weaker position. But of course, as soon as optimism returns, then South Korea should do very well.
So you haven't increased, for example, your holdings of South Korean equities in this week?
No, we've pretty much stayed where we are. We haven't sold and we haven't bought. Basically, we are because the change in price hasn't been that dramatic, frankly.
Rest of the world, everyone's concerned about clearly European crisis, the Chinese slowing down, the 14 trillion of debt in the States. Again, how do you view the emerging market climate into next year? You're now clearly in Argentina. Is Latin America, for example, a better bet than Asia?
Well, if you look at the whole picture, you'll see that the debt of these countries is quite low. The debt to GDP ratios are substantially lower than the developed countries, the U.S., Europe, Japan. Then if you look at the foreign reserves, you see foreign reserves are right up there and surpass that of the developed countries. And then, of course, inflation is down and not looking like it's going to move up dramatically in the near-time future. So if you put that all together, we think that emerging markets are going to do very well next year when people wake up to the realization that they've got to be diversified, and most importantly, diversified in emerging markets.
You always point out that, in fact, emerging markets have outperformed developed markets in 8 of the past 10 years. With the Chinese, in fact, slowing down, do you see that happening for next year as well? I mean, I know it's hard to forecast the impossible, but will it be as strong next year?
I think it will be, and one of the reasons is that you must remember in 2010, last year, there were a lot of IPOs, over 540 billion in emerging markets, and half of that in China and in Asia. So there was just a little bit too much money drawn out of the secondary market. This year, the amounts are about half of that. So I am pretty optimistic about this coming year. I think the markets will do much better.
I must ask you about China. Some are saying hard landing, some are saying soft landing. What everyone seems to be saying is property bubble, credit bubble. That's the concern.
Well, I would say no landing. I think the Chinese are going to continue to push for a fast-growing economy, and they have the wherewithal to do that with all the foreign exchange reserves they have and with an incredible amount of infrastructure that still has to be built. Now, admittedly, the housing market is down, and there'll be less growth in that area, at least in the high end, but in the low end, given the 5-year plan to build low-cost housing, that will, move along, maybe not at the pace that it was. So I think that you're going to see fairly good growth. 7% growth is what we're looking at, is certainly not slow growth. In real terms, this is an incredible fast growth for a country that size. So I'm pretty optimistic about that. On the stock market side, there's been a little bit too much new stock coming in, and that has tended to depress the markets. But the good news on that side is that things are going to get a lot cheaper and more attractive. If you have more equity out there, it'll be a buyer's market.
Now, China being Brazil's biggest trading partner, you're now in Argentina. Your next stop is, in fact, Brazil. You're doing this Latin American tour. I mean, how do you view Latin America as a good opportunity, and where are you looking to invest in exactly what at? Which assets?
Well, Brazil is the big boy on the block. Brazil is where we have a biggest part of our assets in Latin America. But here in Argentina, things are looking very, very cheap. And the interesting thing is the influence of the Chinese. The Chinese have come in. They have a deal with Standard Bank of South Africa, who had a banking operation here, and they bought that up. I was just talking to somebody who's in the agricultural area in Argentina, and the Chinese are building a railroad to get the soybeans out of the interior. Lots of this kind of activity is taking place. And so it's very, very interesting to see the dynamics of, how countries like China, India, even Russia are moving into these areas in Latin America and supplying more foreign exchange and investment.
Thank you for joining us, and have a very safe travels on your trip. Also, happy holidays to Dr. Mark Mobius there from Franklin Templeton, joining us there on the phone from Argentina.